Hi everyone, welcome to today's video. So let me start today's video by talking about a very important example. And here is the example in front of your screen, and then I will set some context for the video. So this example is about Hindustan Unilever, and you will see that this is the resistance line. This is the support line. What is resistance support? Please don't worry, I will explain that in a minute. And you would see that the stock danced around in this zone. It fell here, and now it has started to go back into this zone. Now, why is it that I am speaking about this particular example here? The reason is very simple. Go back on my channel and look at some of the past videos for Hindustan Unilever that I have done. I would have at least talked about Hindustan Unilever on 30 of my videos. And what you would notice is that I started talking about Hindustan Unilever during this phase quite aggressively. Why? Because this is called a zone of bulk buying. I had explained you this concept, and let's look at if you would have purchased this stock, even the average price in zone of bulk buying, what would have happened? You would have purchased this stock somewhere around at this average, around 2000 rupees, and now it is at 2600 rupees. You would have made approximately 25% gain on this safe stock. That's the important message that I'm trying to give you. With that viewpoint in mind, there are two things that I want to do today. So number one, I'm going to talk about why understanding technical indicators is very important for beginners. And second, I'm going to speak about 5 important technical indicators that you should know. And I will explain that in very easy to understand language. If you like the explanation, please like the video. In fact, please like the video anyways, and we will get started. So let us quickly touch upon as to why is it that you should understand about technical indicators. The first and foremost point is that if you understand the technicals, it talks about short to mid-term price movement of a particular stock or the entire market. Again, let's go back to the Hindustan Unilever example. So this zone is a zone of bulk buying. What does that indicate? It indicates that you should have been purchasing this stock as per the technical indicators in this zone of bulk buying. In case you don't understand what zone of bulk buying is, I have already explained on some of my previous videos. I will link it somewhere here. So please go and watch it. But the important message that I'm trying to give out, that if you are taking a short-term or a mid-term view of the market, there are certain technical indicators that can help you make that short-term money. So therefore, understanding technical indicators is very important. Second key reason why you should understand technical indicators is that it saves you on majority of the times from buying overvalued things. For that, I'll have to make a separate technical video. If this video gets 20,000 likes, I will make that part, how to identify undervalued stocks. But let us talk about 5 important technical indicators that you should know as a beginner. So the first important technical indicator that you should know is called as the triple bottom. Now triple bottom, what is exactly meant? So in very easy to understand language, this is what a triple bottom looks like, that there is a very clear resistance and there is a very clear support line, and the stock moves down. It's moving in a downtrend. It touches it once, comes back, falls again, touches it twice, comes back, and then finally falls back and touches it thrice. Now if you see these 3 touch points at the baseline or the support line, it might be the right time to buy that stock because it is likely to give a breakout from that particular point. Let me use an example and explain this concept in slightly more detail. So you can use this free website called as tradingview.com, and you will be able to do your technical analysis via this. So here you go and type out ICICI Bank and please put the weekly candle. So you get the option of putting all these different types of candles. So here if you go, you will see different patterns. Please put the weekly candle here and you will get a chart like this. So I hope everyone is clear. Now let me zoom this out because we are looking at the last part here, and you tell me whether you see a similar pattern playing out. So the first criteria was that, hey, the stock should be in a downtrend. So first criteria is met. Downtrend simply means that the stock is falling. Second key point, what should happen is that there should at least be 3 touch points on the same or approximately the same line. Please don't say that, hey, there is a 0.11 millimeter gap or something. No. So please do it broad, mota. So the stock is touching thrice. This line where the stock touches goes back up. It is called as the support line. Where the stock touches and falls back, this is called as the resistance line. So there is a very clear resistance line here and there is a very clear support line here. The stock has touched 1, 2, 3 and it is going up. So from that particular perspective, this looks like a breakout. Now, does it mean that you should sell everything, invest everything in ICICI Bank because some technical indicator has been formed? The answer is absolutely not. All this simply points out is that this is one additional data point for you to consider, and the likelihood is very good that if the fundamentals of the stocks are good plus the technicals are giving you some indicators, then you can consider taking some positions in the stock. Today I am not doing fundamental analysis, I am simply doing technical analysis and trying to show you 5 important patterns. This is pattern number 1. So now let me give you an important homework also, and please complete the homework and type it out in the comment box. So the homework is that this is the chart for HDFC Bank. Here we are looking at a daily candle. Why we are looking at a daily candle? Simply because of the fact that we are looking for immediate short term. If you are looking for a slightly longer duration, look at the weekly candle. So here we are looking at the daily candle, and you tell me whether this is forming a triple bottom or not, at least this part. Right? I would love to know your response. That would mean that you have understood the concept or not understood the concept. So with that viewpoint in mind, let us understand the second concept. So this is called as Pennant, or it is also called as a variant of a flag pattern. And what happens here is that you will see this type of a convergence. Divergence means that two lines are going apart from each other. Convergence means that both the lines are coming together, so to say. So here you will see a convergence pattern. This is one key important component of this flag pattern. Second key component is that this should happen after a breakout has already happened. So one breakout happened already here. Now what is the meaning of breakout? Breakout simply means that the stock gave an up run. So it was on an up move. This is the second key criteria that should meet. And third and finally, there should be very high volumes in this part, and the volume should go down with time. So 3 important criteria. Number 1, breakout has already happened. Second, convergence pattern should be there. Third and finally, the volume should be very high initially and it should be coming down. If these 3 criteria meet, then it is said that as per this technical indicator, there should be a breakout of the stock that should happen from that particular point. So let me show you an example here by taking you to Relaxo's chart. Again, you can go on TradingView and look at this chart. So here you can clearly see that this top line is the resistance line. This is the support line, and you have this convergence pattern forming. So this criteria is met. You also see that the stock had already given a breakout. So this second criteria is met. Then how do you check volumes? So you see that these bars are going lower and lower. So from this point, the volume has generally been decreasing. So from that viewpoint in mind, if this convergence pattern gets completed here, right? So it was about to get completed somewhere here, and you should have purchased this stock somewhere here around this point. And after that, the stock gave a breakout. And how much breakout did it give after this technical indicator? So it gave approximately 24% breakout from this point. So the importance of this pattern is that please do not buy stocks when they are going up. For example, if you would have purchased this stock here, that would have been disastrous. You should have purchased the stock as per the flag pattern, and you could have booked an immediate gain or almost an immediate gain of 25% on that stock. Now comes the third pattern, which is called as the ascending triangle pattern. And this is what an ascending triangle looks like. That number 1, there has to be a breakout of the stock. Second key point, it should be making higher lows. For example, this point 2 is higher than this point 1, right? So therefore, this is making a higher low. Again, it could be considered as a variant of the convergence pattern, that here, if you connect these 2 points, then it is converging, and anytime converging is happening, it is likely that the stock is going to give a breakout. So here you can see that this convergence pattern was forming, and after that, you are likely to see a breakout. So let me demonstrate this pattern on SBI's chart. So this is the resistance line, this is the support line, and you will see higher highs forming, and you can see that this high has been formed multiple times, right? So multiple touch points. It's not as if that it should only have 1 or 2 touch points, it can have multiple touch points, and you can see that resistance is almost intact. So resistance is not changing its angle. Now this is a convergence pattern again, and after that the stock gave a breakout, but how much breakout did it give? It only gave like a 5% breakout, right? So was this a strong ascending triangle? The answer is no. For a triangle to be stronger, the breakout should happen fast. So let me pick another example. So this is the second time this pattern is forming, and here you can see multiple touch points again, 1, 2, 3, 4, at least 5-6 times it has already touched. The resistance line is almost intact. Support line, we are making a higher lows. And what happened after that? So there was a run up of approximately 12% from October 12th to November 8th. So in less than a month, the stock gave a 12% return. So again, go back to SBI's chart, because SBI is a great trading stock. It is not a good investing stock. So you can identify this pattern playing out quite aggressively there. So now comes the fourth and a very important pattern, probably the most important pattern that I will be speaking about, and it is called as the rounding bottom pattern. So rounding bottom pattern simply is an accumulation pattern. What is meant by accumulation? It simply means that big investors are buying these stocks over a long period of time. So rounding needs to be seen on a weekly context, not on a daily chart. Why? Because when we are considering the rounding pattern, we have to take a lot of time periods. So you should at least look it up on a 3 to 6 month window. So let me explain this by using the example of ITC, which has recently started to give a breakout, and for a very long period of time it was hardly giving any breakout. So why did that happen? The answer lies from a technical pattern in the rounding pattern. So let us understand, and let me take you to ITC's chart. So we are on ITC's weekly chart, and you can see that there are multiple rounding patterns that you could identify. So this is one, right? So the stock has fallen. From here, this is where the rounding starts, that the accumulation has started to happen. And after this point, the stock gave a breakout, it fell again, and then it gave another breakout from this point. So this could be considered as one rounding pattern. This is another rounding pattern. So this is a very smooth rounding pattern. And again, if you let the rounding get completed, or even if you buy it somewhere here on the upper end of the rounding when it is happening, again, the gain was approximately 10%. Now let us look at the recent performance of ITC. So this was a clear rounding pattern. After this, the stock gave an up move, a little bit of an up move. Then it fell. Even if you would have purchased the stock, let's say somewhere here, then it went up, then it came down. And if you would have held it, you would have still made gains because the stock immediately shot up. It did not even complete its rounding here completely. So here are some important points that you should know about rounding pattern. Number one, it is a very commonistic pattern and everyone knows about it. So there is nothing new here per se. Even the operators know. So they deliberately try to trap you sometimes by bringing down the stock price quite aggressively. For example, here, this was a rounding pattern, very clear rounding pattern. They took it up a little bit, then they brought the stock down. And then you would have felt that, you know what, rounding, it did not work. Let me sell everything. You would have sold. The rounding did not even get completed and it went up. So the point I'm trying to drive home is fairly simple, that use these technical indicators in conjunction with the fundamentals of a stock. Please do not use these in isolation. You will get trapped very, very badly. If you had no faith on ITC and if you just moved around just in terms of technicals, you would have been stressed even when the technical patterns are completely playing out. So let's talk about fifth and final pattern for today, which is called as the falling wedge pattern. And this is what a falling wedge pattern looks like. That initially there is some kind of a breakout. So breakout means stock price going up. Then the stock falls. It takes support once, twice, thrice. And even on the resistance line, the resistance keeps falling. So this is a very important pattern. Why? Because again, this is a convergence pattern, right? So what happens here is very simple, that the lows are getting higher, that the second low is higher than the first low. So this looks negative, but it is not. And the second key thing is that the highs are getting lower. So it might look to you that, hey, again, some kind of a bad stock, but it is not. So please be on a lookout for this falling wedge pattern. And let me demonstrate this by picking a specific example. So here is an example of Hindustan Unilever. This is the resistance line. This is the support line. And what are you seeing? If you connect these three dots, these three blue dots, you will see that the highs are getting lower with every passing point. And what do you see about lows? So let me demonstrate that by using green dots. So here you can clearly see that there are multiple such points and the lows are getting higher. For example, this point number 2 is deeper than point number 1. So this is a clear wedge pattern. And once this wedge got completed here, even if you would have purchased it somewhere here in this zone, you would have still made a good amount of profit in this zone. Now here is the homework for you. This is from ITC and please tell me if this is a falling wedge pattern or not. This will help you practice. So just in summary, on today's video, we learned about the importance of technical indicators. We talked about 5 important technical indicators. Most important point is that please use these technical indicators in conjunction or in association with the fundamental analysis of a stock. I keep on presenting a lot of fundamental analysis, and also please don't forget to like this video. If we get 20,000 likes, it will indicate to me that you actually want me to make technical indicator videos, and I will make more such videos. But I hope you enjoyed this video and I will see you soon.